What's going on, traders? Welcome back to World TFX Academy. In this video, I'm going to walk you through the ultimate buying setups, not based on hype, not based on indicators, and definitely not based on guessing. Most traders struggle with buying the market because they, one, buy too early, two, buy without confirmation, and three, buy with purely off emotion. Today, we are going to fix that. By the end of this video, you will understand, one, what a real buying setups look like, two, where the higher probability buy zones comes from, three, why patience is required before entry, and four, how professional traders buy the market with structure. This framework is the same one taught in my book, The Ultimate Buying Setup. Okay. And this is used daily inside World TFX Academy. Let's do it. Most traders lose money buying the market, not because buying doesn't work, but because they buy incorrectly. Here's the truth. Buying the market is not about catching the bottom, predicting reversals, or reacting to a green candle or to green candles. Buying is about confirmation. Most traders see price drop and immediately think, this looks cheap. But price doesn't move because something looks cheap. Price moves because selling pressure weakens and buying pressure takes control. Until that happens, buying is nothing more than hope. Look, professional traders don't buy because price is low. They buy because the market proves sellers are losing control. Every strong buy setup starts on the higher time frame, such as daily. All right, I'm sure this will. We're talking about weekly, monthly, and of course the daily. Okay. Before I even think about an entry, I ask myself three questions. Okay. One, where is the market reacting from? Where is it reacting from? Two, has this level mattered before? Three, what did price do the last time it was here or last time it was there? Okay. This is called looking left. Basically, market is currently at this low point. I'm looking to the left to see what it did last time. I'm just simply reading and reacting. Looking to the left to see what the market did last time and anticipating for it to give me something very identical or the same thing in the current market date so I can take that trade. Now, if price previously, one, reject strongly, right? Last time it was here, did it bounce and go up? Or two, create an impulse move upward. A lot of time it hit the zone and shoot straight up, right? Or did it form a base before expanding? Sometimes market will come to the area, somewhat consolidate before going up, okay? Now, that area become a buying zone, not an entry, okay? Again, that area becomes a buying zone, not an entry. So let's mark this zone real quick, okay? Start from here. We using the daily, drag it low. All right, let's lock this in real quick. Boom, a little bit forward down. Okay. like so. Okay. So zones are areas of interest, not execution points. And this is where most traders make their first mistake. They enter inside the zone instead of waiting for confirmation. Okay. Let me show you one more time. Basically. All right, look, market came inside of the zone. All right. They normally enter the trade, but without waiting for confirmation. A buying zone is not a single line. It's not a fib number, and it's not an indicator. A buying zone is an area where sellers previously lost control. Like so. Okay? Think of it like this. The zone is where the market is asking a question, and the answer comes from price action. Until the market answers that question, there is no trade. So instead of buying blindly inside the zone, we wait for evidence. That evidence comes in the form of 1, failed selling pressure, 2, loss of bearish momentum, and 3, a bullish engulfing confirmation. All that will be happening, of course, at a zone point. Okay? Let's be very clear here. A bullish engulfing is not just 2 candles. A real bullish engulfing represents sellers, 1, attempting continuation, 2, buyers absorbing that pressure, and 3, controlling shifting upward. Okay? But here's the key. A bullish engulfing only matters at the right location. A bullish engulfing in the middle of nowhere means nothing. Okay? Look. This is a market that falls. Okay? We're going to generate a zone real quick. A bullish engulfing in the middle of nowhere means nothing because it was not at the right zone. It wasn't at our major zone. It came to this zone point that was in the major zone, right? But a bullish engulfing at a higher time frame buy zone, and after selling pressure weakens and align with structure, that is a high probability buy setup. This is where professionals execute. We using this right here, right? So this would be either a monthly, weekly, or a daily time frame. So this zone was based off the higher time frame, right? Market tap here and give you a bullish engulfing, but it wasn't at a major turnaround point where we marked our zone at. So we need market to come to a higher time frame major zone before we start thinking about buying the market. This is where professionals execute. They wait for the market to come to the major zone. Once confirmation is present, execution becomes very simple for the buy. Entries taken off the zone after the bullish engulfing confirm. Stop loss is placed below the last low. Not random, not emotional, based on structure. Your stop loss answer one question. Where am I going? Okay. Where am I going? If price break below the structure that caused that buy, the idea is invalid. This is how risk is controlled based before the trade is placed. Okay, so daily double bottom zone, right? Market came to a zone. We're gonna drop down to the 4-hour, right? Minimize this real quick. Go find a zone. Okay, that's the area right here, double bottom. Okay. Here is market now at our zone. Okay. With a bullish engulfing confirmation. This bullish engulfing engulfed the last 4 or 5 bearish candles, which is okay. And you would naturally enter here and put your stop loss at the last low, right? Just like so. Most traders don't lose because they lack strategy. They lose because they lack patience. Okay? They lose because they lack patience. Patience is not a personality trait. It is a skill developed through structure. When you wait for it, when you wait for location, confirmation, and structure, you trade less, but trade better. This is how consistency is built. Okay? By just simply waiting for market to come to your location, give you confirmation, and off your structure. Let's quickly cover what to avoid when it comes to waiting for your setup so you could buy the market. 1, buying just because price drop. That's a no-no. 2, buying without confirmation. That's a no-go. 3, buying strong momentum. Fear of FOMO. Just be patient. And last one I have is moving your stop loss based off your emotion. That's something you don't want to do. Once you take a trade and you have all your confirmation for the reason why you took that trade, just leave it alone. Okay? Let the market do what it does. Every mistakes come from impatient. Removing impatient and the strategy will work. So remove impatience and the strategy works. Okay? It will work. Buying the market is not complicated, but it does require discipline. When you focus on higher time frame zone, monthly, weekly, and daily, confirmation through bullish engulfing, and structure-based risk management, you stop guessing and start executing with confidence. This is the foundation taught in my book, The Ultimate Buying Setup by Royalty FX Academy, where you trade less, you wait more, but execute with structure and win most of the time. Please like, subscribe, comment, share with your friend. Appreciate the love, and I'll see you in the next lesson. Peace out.